hi everybody. I am Sally.
And I'm Deanna.
And we're your listing specialists with eXp Realty here in beautiful Bellingham, Washington. And we have a special guest today that we'd like to introduce you. Deanna, do you want to introduce our guest?
Absolutely. So today we're talking with Dodie Mason. She is an expert lender in the mortgage lending field. She works with Umpqua Bank. They are the leading mortgage lender in Whatcom County. So if you want to talk to an expert, this is the one to talk to. And we thought that we would bring Dodie on today because a lot of, one of the big things with the market is what's happening with lending and rates, and actually just, are people able to actually finance a purchase at this time? So without further ado, Dodie, you want to take it away and maybe let us know a little bit about what's happening with rates right now.
Yeah.
Thank you very much, Deanna and Sally. Appreciate having the time to be here with you two today, even if we're in our own homes.
That's right.
So this is an absolutely great time with interest rates right now. They are historically low, and that's something everybody can take advantage of right now. Currently, a 30-year fixed rate for a purchase loan is down to 3.125%, which is amazing. That's a 30-year fixed rate loan. Just to give you a little idea why they're historically low, or how that comparison works, is back in 1981, we were looking at a 30-year fixed rate at 18.6%. It's phenomenal.
Wow.
The drop
That's
we've
like a
had.
bad credit card rate.
Yes, exactly. Exactly. And now we're all the way down here to 3.125%. In looking back just 1 year ago, in April of 2019, a 30-year fixed rate was at 4.375%. So in taking a look at a $300,000 mortgage, that would have been a principal and interest payment of $14.97 a month. Today, at 3.125, that same $300,000 mortgage is a principal and interest payment of $12.85. That's over $200 a month less for the same mortgage just 1 year ago.
Right.
So it just helps to make things more and more affordable for people. And I think everyone is surprised at how low their monthly payments can be with these historically low interest rates.
Does that mean that people can qualify for a little bit higher price point then?
Absolutely. In giving people $200 a month more buying power, that's about $50,000 more in a home loan. So it can help people in purchasing up a little bit more in what they're looking at.
Yeah.
There's a lot of factors that go into the interest rates too, in terms of not everybody may be offered the same interest rate. And the reason for that is the interest rates are based on the size of the loan, the down payment, credit score, and whether or not it's a purchase loan or a refinance loan. So there is a difference. The refinance rates are running higher today than the purchase rates. And then the last thing that affects the interest rates too is the type of loan, what loan program people are looking at. Are they doing a conventional loan? Are they doing a government loan, that being an FHA loan, a VA loan, a USDA loan, or perhaps a jumbo loan? So you are going to see a little variance out there in the interest rate.
Yeah, so you shouldn't refinance, you should sell.
It's a good time for either one.
Yeah.
But there's a lot more opportunities for people to buy now in terms of what they can afford to buy.
Nice. So I have a question too that I still get asked all the time, and people think that they still need to save 20% down before they can get a loan for a mortgage.
That is a really common misconception that people have. It's surprising, all these years that we've been doing low down payment loans, there still are so many people out there that think that they need 20% down before they can buy a home loan, or they need 10% down. In reality, we have several 0 down loans even. So there's opportunities to buy 0 down. There's 3% down programs, 5% down programs. So it is not necessary. And what happens if people focus too much on saving, thinking it's going to make a big difference on their monthly payment, they end up losing out, because they might want to wait 6 months or a year to save up more money. They're losing out on these interest rates. So the best thing to do is buy today while the interest rates are low, because if somebody is looking at saving another $20,000, so they want to wait a year or more to do that, that $20,000 that they took a year or more only makes a difference of $100 on their monthly payment. So it's not worth, in many cases, taking all that time to save money and missing out on opportunities.
That's a really great message. Yeah, because I think there are going to be a lot of opportunities in the next few months. And so that's really good for people to know. Don't wait.
Yeah.
Talk to Dodi.
Yeah, exactly.
That's right. Yeah, it really, if people are considering buying a home, they should talk to a lender as soon as possible so they can understand what the true numbers are. See what they need for a down payment, see what their monthly payments are going to be, and find out just how affordable it is for them to get into a home these days.
Yeah. I have a quick question, if that's okay.
Yes.
So the question I get all the time is, I get a lot of calls from people thinking about buying, and they don't know that that's the first step, to call a lender. So, I always make sure people do that first. The hesitation, of course, is that they think that if they talk to a lender, that it's going to be, and that lender pulls their credit score, it's going to be a ding on their credit score, and that's still just a conception that people have, and why they hesitate talking to a lender. Can you speak to that a little bit?
Sure. Yeah. Number one, we can't give people good direction without seeing their credit score and knowing what type of loan program we can put them in. So that's why we do have to pull the credit score.
Yeah.
However, one pull on their credit is not going to negatively affect their credit score. It's multiple pulls within a short time period that do.
Yeah.
So as long as they're not checking into multiple financing sources or looking into applying for credit cards or car loans or something like that in a short period, they'll be fine with having their credit pulled from time to time. The other thing too, once we pull their credit score, that credit score is good for 4 months. So as long as they find a house and close on that house within a 4-month time frame, we don't have to pull their credit again once they do find a house.
Excellent. Good to know.
That was a great question.
Okay.
Yes.
I tried.
Any other thoughts or scenarios that have come up with buyers and what's holding them back from jumping into the market?
That's the biggest one, is that people, like you said, people do need to know that, like Deanna's question, they need to know that it doesn't require 20% down. I love what you said about, the waiting is actually detrimental, right?
Yes.
Yeah. For sure. Well, Dodi, thank you so much for your time today.
Well, thank you for the opportunity. It's great to get word out there of what a great time it is to buy, and people shouldn't hesitate. They should talk to you, talk to a lender, and start making plans to buy their new home.
Exactly. And we'll share your contact information here in this video so people know how to get a hold of you.
Great. Thank you so much.
Thank you, Dodi.
All right. Have a great day.
Bye.
Stay safe.
Okay.